Welcome to everyone. This week video will cover the gold market for the week of October 20th, 2025. Before we start, make sure you read carefully the disclaimer. Since my last September 22nd update, the gold market rallied $571 or 16%. This week we will explore which scenario is the most likely for the next few months. Let's start by the 18-month cycle. In my September 22nd update, I explored the possibility of two scenarios. The rally following the August low confirmed the August low as the 18-month cycle low, as confirmed by analyzing the short-term cycle in the same update. What next for the actual 18-month cycle? We're still expecting the peak for this cycle to form between March and April 2026 and the low in January 2027. At the time of the formation of the next 18-month cycle, the gold market should at least decline to its cycle line, the yellow line. We have to watch carefully where this 18-month cycle peak will form. To keep the bullish trend, the gold market have to form its peak after April 2026. If the peak occur before March, this will be the first sign of weakness. By keeping analyzing the shorter cycle, we will have more precise information for the 18-month cycle peak formation in order to take trading decision. The yellow trend line is the 18-month cycle trend line, or VTL. This VTL will help us to identify the first sign of the 18-month cycle peak, and the next higher cycle peak, the 54-month cycle formation. Because the gold market forms sharp peaks and round bottom. In 1970s, Hearst mentioned the gold market is synchronized by his peaks. Like I mentioned in previous updates, with the gold market is very useful to keep also the peak analysis, and doing a dual analysis, the peak and trough analysis. In this week update I would like to add the peak analysis. We will start by the 18-year cycle first. In gold market, the 18-year cycle and the peak analysis have an average between 16 and 18 years. Let's start with the first 20th century major peak of 1980. In 1980 the gold market formed a peak at $873. The first 18-year cycle formed his peak in 1996 at $419. The second 18-year cycle peak was in 2011 with a $1,923 high. This cycle was 15 years long, shorter than the Hearst nominal model. If we add 18 years to the 2011 peak, this gives 2029 as the date for the third and last cycle, to complete the 54-year cycle. In the Hearst nominal model, the 54-year cycle have a 3-to-1 ratio with the 18-month cycle. To have a more precise time target, we have to go to the next lower cycle, which is around 8 years. In one 18-year cycle the ratio is back 2-to-1. Meaning there is 2 9-year cycle in one 18-year cycle. From the September 2011, the peak for the next 8 years cycle should be around 2019. The next peak formed on August 2020, exactly 8 years and 11 months later, almost 9 years. From the August 2020 peak, using the monthly scale, the next peak occurred on March 2022 at $2,078. This cycle was 19-month long. The next one was on December 2023 with a $2,152 high, 21-month long. And the last 18-month cycle of this 54-month cycle was on April 2025 with $3,509. This peak was also the 4.5-year cycle peak. The average length for the 18-month cycle inside this 54-month cycle was 19.3 months, just 1.3 months longer than the 18-month average. Let's now make a forecast for the next 54-month and the next 18-year cycle peak. The first 18-month cycle peak is expected to form around October 2026, the second one in May 2028 and the last one in December 2029. This is a roadmap for the next 3 years or so. It doesn't mean the gold market will keep moving straight up to 2029 and always making new all-time up to 2029. For the trading perspective is better to use the daily cycle or for midterm the weekly cycle. Speaking of weekly cycle, let's see what information the 40-week cycle give to us. According to the Hearst rule of synchronicity, the August 20th low was the 18-month low, but was also the low of all the shorter cycles, like the 40-week. The next 40-week cycle low is expected to form in mid-May 2026, and the peak by the end of December 2025. At the time of the next low formation, the gold market should find support on his cycle line, or FLD, the blue line. For now it's still too early to know where the cycle line will be on that date. The blue uptrend line is the 40-week cycle trend line, or VTL. When the gold market will cross sharply below it, this will confirm that not only the 40-week cycle peak has formed, but also the 18-month peak has also formed or in formation. Because the gold market is so bullish, the 40-week didn't provide any trading signal and not very helpful for the trading perspective. Let's see the 20-week cycle. The last 20-week cycle low formed on August 20th at the same time than the last 40-week. The next low is expected to occur by the end of December, the green vertical dashed line. At that time, the gold market should find support on his cycle line, which will be around $4,300. After forming his low in December, the gold market should rebound on his way to form his 40-week cycle peak, then decline and cross below his cycle line, providing a potential downside target. Again, due to the very bullish trend, the 20-week cycle didn't provide any trading signal on the weekly basis since 2023. The green uptrend line is the 20-week cycle trend line. And when the gold market will cross below, this will confirm not only the 20-week cycle peak, but also the 40-week peak has formed or is in formation. This will be a very valuable information. The 80-day cycle. On the 80-day cycle, we have the same situation about the trading signal. The gold market is too bullish to provide any. Until today, Friday 17, 58 days passed. We need 10 more days to complete this 80-day cycle. The low is expected to form on October 27th, the purple vertical dashed line. The Friday $4,392 is certainly the peak of this 80-day cycle. Technically at the first 80-day low formation after a major low, the market should find support on his cycle line. But since there is very good amount of bullishness, and the peak formed on the right part of the cycle, there is a high probability the market will form his low above his cycle line. On October 27th, the cycle line will be at $3,650, meaning a 17% potential decline, for the reasons mentioned above, and since is only the first 80-day cycle from the major low, this is very unlikely this will happen. Let's see the 40-day cycle. After the August 20th low, the gold market formed his first 40-day cycle low in September 18th. This cycle was 29-day long, 5 days shorter than the 34-day average, discovered in 1970s by Hearst. The second 40-day cycle is expected to form on October 22nd. Technically, the market's supposed to cross below his cycle line. But again, since the gold market is very bullish, we can expect the market to form his low well above his cycle line. In conclusion, gold bullish momentum continues across multiple time frames, with cycle analysis pointing towards sustained strength 2029, while short-term cycles suggest minor corrections ahead. The overall trajectory remains positive. Traders should focus on daily cycles for entries while keeping the bigger picture in mind. For more details, visit tradingmarketcycles.com. If you found this helpful, please like and share this video, subscribe to stay updated with our weekly trading insights. Thanks for watching, see you next week.